Folks, I've said it before and I'll say it again. One of the biggest fundamental shifts in the world post-corona pandemic will inevitably be increased interest in biotech stocks. I believe institutional investors, government, and most retail investors have realized the value of biotech. After all, corona pandemic created extended damage to global financial economy, killed hundreds of thousands of people, and still to this day, we don't have a vaccine, systematic testing, or many answers on how to avoid another pandemic from further occurring in the future. I believe a massive financial shift into biotech will occur over the next year, causing faster drug development, increased safety, and better testing will happen over the next few years. This will cause increased allocations from hedge funds, substantially larger government grants for research, and more than likely, funding from the largest companies in the world to help avoid or fight the next pandemic. Now, today I want to bring you to the table two small cap biotech stocks. While these two companies are not on the radar just yet, on institutional radar just yet, the influx of capital into biotech should lift most companies, and there's always a segment of investors who are seeking lower priced shares. That's why I specifically wanted to give you two top biotech stocks priced under $10, ones that have the potential to increase substantially in the near term and offer a solid risk to reward for your investment dollars. Now, two of the best low-priced equities at this moment are Amarin, ticker symbol is AMRN, and Atara Biotherapeutics, ATRA is the ticker symbol. These two biotech stocks have been heating up over the course of April, and both appear undervalued relative to their long-term outlook. Let's first talk about Amarin, ticker symbol AMRN, and then we'll jump into Atara Bio. Now, Amarin is a single product commercial stage biopharma. The company's value proposition begins with and ends with prescription omega-3 treatment Vascepa. Last year, the drug gained a major label expansion as a treatment for patients taking statins, but who are still at risk of cardiovascular disease. This new indication was thought to be worth at least $2 billion in annual sales, and possibly quite a bit more. Unfortunately, U.S. District Court stripped Vascepa of its patent protection in March, causing Amarin's share to collapse. Thanks to the growing optimism with this decision, it'll be overturned upon appeal. Amarin's shares have gained 88% in nearly 4 weeks since this adverse ruling. This rapid recovery has been fueled by the fact that Vascepa could still achieve blockbuster status, regardless of this patent ruling, due to its health commercial opportunity. With a successful appeal in hand, Amarin's shares should at least rise by at least 50% from current levels, in light of where the stock currently is trading or where it was trading before the Black Swan event. Based on Vascepa's commercial opportunity and the average pre-pandemic premium from a commercial stage biopharma stock, it appears Amarin's shares are arguably still undervalued based on both fundamental and technical estimates. Now, the second stock on our list is Atara. Atara is a cell-based immunotherapy company. Atara's strategy centers around launching the first off-the-shelf T-cell therapy, dubbed Tab-cel, for patients with Epstein-Barr virus as soon as next year. A regulatory filing for this first-of-its-kind therapy slated for the second half of 2020. Although Tab-cel's peak sales are expected to be rather modest at $140 million a year, the company's second product candidate, ATA188, could be a mega blockbuster as a novel treatment for patients with progressive multisclerosis. What's more, Atara's value should skyrocket if its cell-based platform is validated with a successful regulatory filing for Tab-cel. There are several big pharma and blue-chip biotech companies racing to develop similar technologies. While there's a substantial risk the company will not come through on its promises, this small-cap biotech stock does have potential to double or possibly triple in value in the event that Tab-cel does live up to its expectations, especially with the current price near $8 per share. I hope that helps. Folks, many people are feeling the pressure of the coming recession. It's true. In fact, some are already struggling to pay their groceries, monthly bills, even their mortgage. But what if there was a way to generate recession-proof income without being tied to an employer? Well, folks, today's your lucky day. I've convinced the ultimate insider, James West, to let my members in on a brand new income strategy. With his simple 2-click trick, you could see weekly income of $3,750, $4,946, or even $9,701. What you need is instant, reliable income, now more than ever. Click the link below to see how you can score your first payday. Do it now.